So you've probably heard the term ETF, but lots of people, especially young people, don't actually know what they are. So today I thought I'd break down one of my favourite ETFs and one which I think is very underrated and not spoken about enough, which is the Nasdaq 100. At the end of the video, I'll show you exactly how much £50 a month invested in the Nasdaq 100 would have grown over the last 10 years. ETF stands for Exchange Traded Funds. And to break this down, you can think of an ETF like a basket of different stocks. So instead of buying an individual company such as Apple and taking on the risk of Apple alone, an ETF lets you buy a load of different stocks in one basket, and you sort of spread the money between the stocks, and therefore you spread the risk between the stocks you buy. So, for example, you could buy the S&P 500, which gives you shares in 500 of the biggest US companies, or the Nasdaq 100 ETF, which we'll talk about in a second. ETFs are good for several reasons. For example, they give you instant diversification, as I've mentioned, so you don't have to pick winners and losers yourself. They are also really easy to buy on platforms like Trading 212 or Vanguard. Another thing is they usually have low fees compared to actively managed funds. So basically ETFs make investing really simple for beginners. They're a very efficient way to grow long term. There's a cool quote by John Bogle, who set up the Vanguard platform, and he says, "Don't look for the needle in the haystack, just buy the haystack." And this is how most people should look at investing, I believe. So the Nasdaq 100 is the 100 largest non-financial companies on the Nasdaq stock exchange. It's very tech-heavy, as it includes names like Apple, Microsoft, Nvidia, and Meta. But it's not just tech. There are also healthcare, consumer, and industrial companies. So in simple terms, the Nasdaq 100 is a way to invest in some of the world's biggest and most innovative businesses. And being more concentrated in tech, there is a far higher growth potential, but this does come with a lot more risk. We can see that over the past year it's gained 26%, even with a stock market crash in the middle. And in the past 5 years, it was up and down, but it's still 124% up. So worthwhile. According to the website Curvo, the Nasdaq 100 has averaged 17.9% return per year for the past 10 years. So, if we put this into a compound interest calculator, if we start from $0, let's say we contributed $50 a month for 10 years with a 17.9% interest rate. Let's put 0 for that. In 10 years, you would have $14,000, or pounds in our case in England. So, from that graph, we can see that after the 10-year period, you would have almost 2.5 times the amount that you would have if you just saved. It can be really depressing thinking about saving for the future, or if you're young, saving for retirement. But if we take this to the extreme and assume or say that the Nasdaq 100 repeats the performance it had done in the past 10 years, but over the next 40 years, we can see that after 10 years, rather than saving 24,000, you would have £2.4 million. And that's crazy. Obviously, that's quite extreme, and we know that things like inflation and the cost of living will decrease that value. But it doesn't take away from the fact that you would have a lot more than you would if you'd have just saved if you put it in the Nasdaq 100. And for relatively cheap, it's a life-changing amount of money at the end of the period. Please remember, I'm not a financial advisor. This is just my take, so always do your own research before investing. And yeah, if you found this video useful, please like it and subscribe. And let me know in the comments your thoughts on the Nasdaq 100, as I'm interested to see what other people have to say.